let me have the glimpse of the visual journey of our inaugural speakers, Mr. Alok Agrawal and Dr. Tanaya Mishra, gracing their presence in the beginning of our conclave. May I request the AV team to please play their AV.
The requirement was unusually specific. Find someone who can read a new regulation, understand its business impact, and explain it before everyone else has finished reading page 1. Alok Agrawal fit the brief perfectly. For nearly 3 decades, he has advised organizations on international tax, immigration, labor laws, workforce mobility, and compliance. Today, as a partner in Deloitte India's Global Employer Services practice, he helps leading Indian and multinational organizations navigate an increasingly complex workforce landscape. A trusted advisor, industry speaker, and recognized voice on labor code reforms and global mobility, he is known for turning complexity into clarity. Final observation: when the rules change, organizations look for guidance. Many find their way to Alok Agrawal. Ladies and gentlemen, please welcome Alok Agrawal.
May I request Ms. Chari Trivedi to please escort our guest speaker? And now I invite for the mementos Mr. Vijay Naidu, HR Head, Westmet, to please give a memento welcome to our both the guest speakers. Thank you so much for coming down here and gracing your presence. Thank you so much. So every generation has people who help us make the sense of change. And right now, change is happening at the speed of software updates. Policies are evolving, workforces are moving, organizations are adapting. In helping organizations navigate this fascinating intersection of people, policy, and possibility, someone has to connect the dots between policy, people, and possibility. And we have exactly that person with us, Mr. Alok Agrawal. So Alokji, we are all ardent to hear from you.
Thank you. With that, what can I say, hyped up introduction, there's a lot of pressure on me now to deliver to that promise, so let me try my best. So firstly, thank you to the Indore Management Association for having me here. It's a pleasure. It's a privilege to be in front of you today. And I would like to start by saying that, the best things in life come to those who wait, right? So I'm not sure if you're aware that the new labor codes, which we are calling as new labor codes, originally were enacted by the government back in 2019. So the Code on Wages had actually received presidential assent in August 2019. So we are going to hit the 7th anniversary in a few weeks from now. But we are finally there, and we'll talk about how that's going to help us, help India's economy, hopefully help all of us in our roles as HR leaders in industry. Yeah. So basically, as we all know, these laws were enacted back in 2019, 2020, right? When we did not have ChatGPT, Gemini, Copilot, Claude, right? We spoke about ChatGPT. Imagine how the life was then and how the world has changed in 7 years. But having said that, these laws are very progressive. They are in line with the reality of today's business environment. And we'll see how, some of these are going to kind of help us in catching up as compared to the archaic laws that we were dealing with before these came in. So basically, these 4 labor codes subsume 29 legislations. These 29 laws have now been repealed once these codes were enacted in November 2025, right? And some of the key, aspects, you have uniformity in the definition of wage. That was a big challenge under the earlier laws. There is a huge emphasis on technology. So a lot of the returns that are going to be filed by us as employers, which were filed in a manual form, will be now in an online format. That will help in a lot of improvement in governance, transparency, and compliance. There is accountability as well on the part of the government and the regulator as well. And there are many provisions which have clear timelines, failing which it is deemed approved. So that is a very progressive legislation where we don't need to depend on the, satisfaction, let me put it that way, of the authorities. There is effective and uniformity in the enforcement, because you have many things now which are harmonized in terms of things which were at the state level. Some of these have kind of been harmonized in a common framework under the 4 labor codes. And the states have powers to issue rules under these codes, but it is kind of bringing some method to the madness. And of course, ease of implementation. Now, we spoke about the 4 codes, right? So let me move on to the next slide. Yeah. So as I said, these were effective from 21st of November 2025. Now, I must admit that we were taken by surprise when they were implemented. But having said that, we knew these codes once they were enacted by Parliament back in 2019, 2020. So what was implemented in November was exactly the same version without any changes, right? There was a lot of information released by the government through press releases and clarifications since then, which help us in understanding the complexity. So what happens is, for some of the provisions where there is no dependency on the rules. So let me step back. You have the 4 labor codes, then you have the central government rules, right? And then you have the state rules for every state. And that is because labor is on the concurrent list of our constitution. So it is going to be governed by both the center and the state. So that is the architecture. Now, on 21st November, we had the 4 codes which were implemented. There were no rules. So at that point, the central government had indicated that the rules under the earlier laws will continue until new rules are issued. So that was kind of a transitionary period, you could say, until the new rules have been notified in May 2026. Now, to take an example, you have some provisions. Let's say gratuity, right? And we'll talk about that, where there is no dependency on the rules per se. So as far as the gratuity provisions under the Social Security Code are concerned, those were implemented from November itself. They did not have any dependency on the rules that were notified. Another important point one needs to keep in mind is the appropriate government concept. For example, you have certain industries like airlines, banks, which are governed by the central government. So those will be only kind of governed as per the codes and the central rules. Now, you have all other industries which will be governed by both the center and the state, right? But let's say if you have a organization that has presence in multiple states, then again there is a nuance. For example, the Social Security Code will only apply based on the central rules for such organizations. So the state rules will not have any role to play as far as the Social Security Code is concerned for those organizations that have a presence in more than one state. So that is the relevance of appropriate government. Now coming to another aspect, as far as state rules is concerned, it's quite interesting that some states have already gone ahead and issued the final rules. So you have final rules issued by Gujarat and Bihar. Madhya Pradesh has issued draft rules, and that is yet to be finalized. So once the final rules are implemented by the states where you have a presence, then the entire regulatory framework is finalized, and we have no excuse, let's say, to comply, right? Now let us come to the wage definition, which is another very important talking point among the rewards professionals within the HR community. So this is one significant change, as I mentioned earlier, because they wanted to bring in uniformity and consistency as compared to the multitude of definitions which led to a lot of litigation under the earlier labor laws. We know there was several cases that reached the Supreme Court as well under the Provident Fund law and some of the other laws as well. So the whole concept here is that let us put kind of some principles based on which the wage will be arrived at. And what are those principles? So you have an inclusive definition, which means that anything you provide to your employee, whether it's in the form of monetary payment or in the form of benefit in kind, has to be included in remuneration. Then you have exclusions which are specified under the Code on Wages definition. These exclusions include a subset, and I'll cover that in my next slide, will include a subset where if you have, let's say, the amounts in those specific exclusions more than 50%, then that exclusion amount will be capped to 50%. So the whole idea behind this approach is that you should have at least 50% of your overall remuneration as wages, right? So if you remember, there were several disputes under the Provident Fund law where PF authorities were alleging that employers were trying to suppress the wages to minimize the contributions to employees. So that is the thinking behind this, capping, if I may. That is the principle behind capping the exclusions to 50%. So that's as far as exclusions and conditional inclusions are concerned. And then you have remuneration in kind, where they have indicated that it is going to be up to 15% of total wages. So that is deemed to be part of your remuneration. Now let us look at this a little more in detail. So as I mentioned, you have certain exclusions which are capped, and those are the ones highlighted in blue on the left-hand side of this slide. So up to the third last, which does not include gratuity and retrenchment compensation. These amounts, even if you put more than 50%, let's say in your overall 100 rupees of CTC, if you've allocated 60% of 100 rupees, that is 60 rupees to these exclusions which are highlighted in blue, then that will be capped to 50% and only 50 will be excluded from your inclusions. And we'll take an example to explain that. Now, some of the open points which the government tried to clarify through FAQs, one big question mark was on performance pay or bonus variable pay. Again, if you look at the previous set of labor laws, the interpretation was those are not in the nature of wages. What we would say is ordinarily payable for the regular job, and therefore it should not be considered. So the government realized that this point needed some clarity and clarified that performance-based incentives, stock option plan will not be part of wages. Now, the other important point which I'll cover, I'm not going to run through each of these, is the last bullet, so, nowadays we have things like food coupon, mobile recharge. These are pretty much become very common in the compensation structure for employees in certain sectors for sure. So again, they had clarified that these would constitute remuneration in kind. Now we'll take an example to get to how this works, right? And this is very important because in my experience over the last 6 months dealing with hundreds of clients, most of them were under the mistaken impression that as long as my basic is 50, I'm fine. I've complied with the wage code, but that's not correct. So as I explained, you have the exclusions which are capped to 50%, but that does not mean that by increasing your basic to 50, your wages will not be more than 50. So if you end up just increasing your basic to 50, depending on the allowances, etc., that you have in your compensation structure, you may have a situation where your wages may go up to 70 or 80%, which obviously means that you have a much higher cost. So taking an example, let's say if you have basic at 20,000, you have allowances at 40,000, and you have gratuity and retrenchment compensation at 16,000. Now the reason we put this gratuity and retrenchment compensation is that, as I said, is not capped to 50%. It's an exclusion but not capped. Now let's see how this will work, right? So our total is 76,000. Now if we look at the exclusions, we start with all the allowances, assuming those allowances are in the list of exclusions, of course. So let's say you have house rent allowance, conveyance allowance, right? These are exclusions. Then we add the gratuity and retrenchment compensation, 16,000. Now we have 56,000 rupees of exclusions. Now we need to see how do we limit it to 50% so that you are calculating the wages properly. So if you look at the overall 76,000, 50% is 38,000, right? So 40,000 of allowances, which is those ones which we had highlighted in blue, minus 38,000, that is 2,000. So 2,000 effectively goes back into your wages as a conditional inclusion. So 76 minus 56, that is 20,000, plus 2,000, your wages is 22,000, right? This is a very simple example, but it's important to understand that two things. One is just increasing your basic will not achieve the purpose. Number two, you need to look at which of your components are inclusions, which are exclusions, because you may have a situation where you may have an excess of exclusions over 50%, which will again go back into wages. So there are some other aspects as well, and we can take that offline. In the interest of time, I'm not going into that. Yeah. So let me just come to this. These are some of the more recent updates which let me just get to this. Give me a second. Okay. So as you know, many listed companies had to make huge provisions on account of additional costs on gratuity, right? Because that's a big change. If my wages is going to be at least 50% of my remuneration, and earlier I was only paying gratuity on basic under the Payment of Gratuity Act, I need to recalculate my gratuity liability for all my employees and accrue or provide for that additional cost, right? So that's as far as gratuity is concerned. You have many situations where you have employees now who are not under ESI falling under ESI, because let's say you had HRA in your structure, and HRA is an exclusion, right? So once you exclude that amount and look at the wages may fall below 21,000, and the employee is eligible to ESI. So that's a very important point for you to watch out for. The rules, the central rules which have been notified in May 2026, They have also clarified the number of working hours and overtime. So they have clarified that the normal hours in a week will be 48 hours, right? So now it's up to companies how they want to, allocate that 48 hours. Let's say there's been a lot of talk about a 4-day work week. If you want to do up to 48 hours in 4 days, there is flexibility to do that. And a very important point is model standing orders. So unlike earlier, now the central government has a larger role to play in standing orders. So they have already notified the model standing orders in the Industrial Relations Code. And if you see, these also apply to the service sector establishments. So it's not restricted only as we had in the past. Of course, many states had exempted, let's say, IT, ITAS from standing orders. So we need to see how that plays out once the states, issue their final rules. But as far as workers are concerned, right, and we'll talk about the concept of workers. As far as workers are concerned, even service sector establishments need to see the standing orders. And there is a process. If you don't want to adopt the model standing order which the government has notified, then you can amend the standing order and submit it for certification to the authorities. But please note that in the interim, the model standing order is already applicable. So you need to kind of look at this very urgently, I would say, because they govern a lot of aspects relating to the ways of work of the employee, the communication between employer and employee. Yeah, the other point is on creche. I will cover that in a subsequent slide. So we'll leave that right now. So as we know, the big change under the labor codes is also the floor wages. We'll see how this plays out, because at this point, the central government has not notified the floor wages. But once that happens, then all states will need to ensure that the minimum wages in those states are at least equal to or more than the floor wage notified by the center. The other point here at the bottom of the screen is a health check requirement. Now, this was again talked about a lot, over the last many months. But if we see the final rules issued in May, this is the factory workers, let's say, or service sector workers have not been included. So at this point, the mandate is specifically for the high risk industries where, let's say, worker safety is more critical, like docks, mines, and other hazardous industries. But it'll be interesting to see how the states issue the rules under the state level in case they start including all other factories as well. Yes, this is again a very, very important concept of workforce categorization. So primarily what we need to see is who are my employees who are classifying as workers and who are not workers, right? So if you see the definition on the left-hand top side of the screen, the text is not very clear, apologies for that, but I'll read it out. So worker means any person employed in any establishment to do any manual, unskilled, skilled, technical, operational, clerical or supervisory work for hire or reward, whether the terms of employment be express or implied, and includes working journalists and sales promotion employee. Now, critical point here is who are excluded. So if you see the exclusions below, exclusions are, I'm going to the third and the fourth one, who's employed mainly in a managerial or administrative capacity, and who's employed in a supervisory capacity drawing wage exceeding 18,000 rupees per month. So these two categories are excluded from the definition of worker, right? So this is kind of similar to the earlier law, but there is one very important difference. Okay, one point, as I mentioned earlier, is now this is across the board, right? All industries are covered. It is applicable to a pure service industry. It is applicable to a pure white collar role. It is not, restricted to a particular segment of the workforce. Now, what we need to see is who are our managerial or administrative roles, so they are not workers. But as far as the threshold, the monetary threshold is there, it only talks about employees who are in a supervisory capacity drawing wages exceeding 18,000. So if you have employees who are neither managerial nor administrative and nor supervisory, right? So a lot of individual contributors who may be earning much more than 18,000, they will all fall within the definition of workers. So it is very important for us to look at our job profiles, job descriptions. Obviously, only the title of the role is not going to determine whether it's a worker or not. And a lot of your compliance requirements under the labor codes will consequently apply to those employees who are classified as workers. So, for example, if you are making any variation to their terms of employment, you need to give a 21-day notice. You need to pay overtime to those workers if they exceed the number of hours we spoke about, right? So even if you are in a, as I said, in a service sector industry, you have white collar employees who are classifying as workers. If they exceed those number of hours, then they will have a right to demand overtime. So very, very important provision to look at. Now we'll see how this plays out in the months to come, because I'm sure a number of sectors and industries will have some cost implications. They may want to relook at the way they are using such workers for their business activities. Yeah. So let's look at some of the areas which have financial implications and others as well. So we already spoke about gratuity, right? Another key point on gratuity is that it now is payable even for fixed term employees. So any fixed term employee who has exceeded 1 year of employment with the company will be eligible to be paid gratuity on a pro rata basis. This does not impact the 5-year criterion for regular permanent employees. It is only for fixed term employees. But please note that beyond that first year, assuming the fixed term employee has worked with you for more than 1.5 years, then you need to start looking at the specific clauses which talk about rounding off, right? We know that there are some rounding off provisions like 240 days, etc. So those will come into play once the minimum first year period is over. So so just to be clear, if he does more than 240 days and leaves as per the fixed tenure, then you don't need to pay gratuity. He or she needs to spend at least 1 year in the initial period for being eligible to gratuity. But after that, you need to start looking at the other thresholds as well. Then, on Provident Fund, a very important point to note is obviously if you increase your basic, as I mentioned, to 50%, automatically you may have an increase in your Provident Fund contributions. But the law hasn't changed, so the government was very clear that they don't want to impose a financial burden on the employees, and therefore they have kept the same principles as was there earlier under the PF Act, which is that if you are drawing wages of more than 15,000 rupees per month, then you are an excluded employee, and therefore it is optional for the employer and the employee to make contributions to Provident Fund on a voluntary basis. If you decide not to, then you can choose not to have any Provident Fund at all. So that continues. And as we all know, recently the government has notified the same threshold of 15,000 rupees, contrary to what was expected. So there was a lot of expectation that the threshold of 15,000 would be increased by the government, because it has been there for many, many years now, and it's quite low, to be honest, but at this point the government has retained that. So there is no change, practically speaking, on Provident Fund. I already covered the possible expansion for coverage on ESI. Now coming to shops and establishments, again, The key point to note is shops and establishments law is at the state level. It is completely outside the scope of the labor laws, and therefore you need to comply with the shops and establishment provisions at the state level as you are doing. Now, the key point here is recently Bihar has repealed the Shops and Establishments Act. So this is a very positive move because again, in our experience over the years, many clients have always been confused about the contradiction, the inconsistency between the leave provisions under the Shops and Establishments law and the central laws. So whether it's leave provisions or it is overtime provisions, or sometimes it's even the base pay or the base salary on which you apply those provisions, those are very different across states if you see that. And therefore, at some point, I think the government may consider at the state level, of course, this is a state level initiative, the state governments may consider rationalizing the compliance architecture and following the example set by Bihar, which does simplify the situation tremendously for companies. We already spoke about the requirement to pay overtime to workers. Now, another key point which is there is core and non-core. Now, this was already existing in some parts of the earlier laws. For example, it was there in Telangana, etc., where you cannot hire contract workers for your core activities. So what are core activities? Core activities are, let's say, what you probably put in your memorandum of association when you have incorporated your company, that I am in the business of manufacturing, let's say, plastic cans, right? So all the activities relating to the manufacture of those cans will be your core activity. And then what are non-core? So the government has given some examples of non-core activities in the labor code. For example, housekeeping, security are non-core. So here the thinking is that you need to have permanent employees or fixed-term employees for your core activities, and you can have contract workers for your non-core activities. Now this, I believe, is an area where we will see some more clarity coming from the government based on representations from various industries, because obviously what is core and what is non-core is very different for one industry versus another. It may be exactly the same activity, but it may be core for you and non-core for your the person sitting beside you who's from another industry. So the other point here is on on minimum wages under the code on wages. So you have a provision to pay overtime even in the code on wages. Now the question is, does that mean I have to pay overtime to all employees? Because earlier, if you remember, I mentioned that you need to pay overtime to workers. So here the one interpretation is that as far as those roles are concerned which are not workers, right, which are employees, because worker is a subset under employees. As long as those roles are concerned which are not workers, one interpretation which is possible and which will play out over the next few weeks and months is that you only need to pay overtime if that individual is at minimum wage. Let's say if that role is at a compensation which is much higher than minimum wage, then then you don't need to pay overtime. So that is something which we need to watch out for. Now I need to wrap up in the interest of time. I'll just see if there's a very important point that I want to cover. Otherwise, we can connect offline. Yeah, we spoke about creche, right? So maybe I'll just use this as a final point. So a lot of the maternity benefits and creche provisions were under the earlier maternity benefits law, which has now got subsumed under the Social Security Code. So here, the government realized that a provision of creche is going to be onerous for certain employers depending on the part of the country they are based in. It may not be easy to provide a creche. And therefore, the rules have brought in a concept of creche allowance. So the bare minimum which the rule notifies is 500 rupees per month for creche allowance to the employee, to the eligible employee. And of course, this monthly amount is subject to agreement between majority of the employees who are in this category and the employer. So if the two parties agree on a higher amount, then the employer needs to pay a higher amount of creche allowance. It cannot pay only 500. So I think with that, I will wrap up, and thanks for your patient listening, and we can connect offline if you have any questions. I would also like to quickly add that Deloitte has an office here locally in Indore. So my colleagues Rahul Gupta, Amit Nayak are here in the audience who represent our team here from Indore, and do take an opportunity to connect with our office and our colleagues in Deloitte Indore. Thank you so much. Thank you.
Thank you, Alokji. Before we have our next speaker, I think there's just one thing I wanted to add on. So I really challenge the people who make memes about HR, that HR is about organizing events. I dare them to come and see these slides and interpret them to us. This is what we do when we are in office. So big round of applause to all of us.
Absolutely.